Good morning, traders. Chris Bess here with Traders Profit Compass with your morning look at markets for Tuesday, November 10th. Okay, before I get into the charts, I want to share a few words with you, a few thoughts about yesterday. When I was thinking about it after the recap and last night, and considering a lot of the comments that I saw in the trading room, and around the Twitter feed and all that kind of stuff, I got the feeling that yesterday could have been a very painful day for a great number of people. And that always hurts. And if you were in that situation yesterday, first of all, I'm sorry for your loss, but I wanted to share some ideas with you here quickly on what you can do in real time and after hours. Number one, when you realize you're wrong, if you were totally flat-footed yesterday and you realize that you were wrong, in that moment, you can decide on how you're going to handle it. And oftentimes that means just closing positions and reestablishing your center, your core, and taking that immediate pressure off. And that's always a decision based on many things. How many positions do you have? Were all those positions with deep embedded gains? Because if you had been riding a Peloton or a Zoom or these other high flying names, you've made a ton of money. So in that situation, yeah, it stings to give some back, but you're still way ahead. Now, if you got in, 3 days ago, that's a different deal. Then you're looking at a significant loss. So there's a lot of variables that go into that decision of if you're just going to, accept your loss, get out, reposition, reorganize yourself. But the one thing you can't do is go into denial mode where you psychologically can't accept what's happened and what is happening, because that can often paralyze you and prevent you from taking positive steps forward as the day and as the opportunities come up, because it's often hard to face that big P&L loss every day when it just gets worse. Now this morning the Qs are off another $10 or something like that, 1.5% to 2%. So if you had held those high flying names, they're going to get hit again today. So take a step back, recalibrate, recenter yourself. Then as a recap procedure, get out your notepad and start taking some notes. What do I mean by that? What were your thoughts heading in, as of last Friday? What were your thoughts? How were you positioned? How were you leveraged? How were you diversified? Was everything that you had, in high-flying Qs, those high-flying names? Or did you have a wide variety of asset classes? Maybe some gold, maybe some bonds, maybe some staples, maybe some basic materials or commodities. When you've got a wider variety of items that are not correlated, you're not going to take as drastic a hit if they come after, all, than they would if they come after, all your high-flying names. So, and I'm speaking from experience. I'm not preaching here. I've told many stories of when I took brutal hits because I was highly concentrated in a few names, and the day the music stopped, I didn't have a chair to sit in. So I know what I'm talking about with that real pain and getting stunned on a bad sale day. So recap the experience and learn from it. It's the only way you're going to be able to advance is to learn from the lesson. Make the tuition count. Make sure you get your value out of that tuition that you had to pay yesterday and today, and make sure it doesn't happen again. And if that's the case, then it may have been well worth the expense to learn that lesson and then shape your trading going forward. So those are just a few words. Let's get into the charts and see where we're at this morning. Okay, SPY 2-hour. We moved down into the gap. Now in the pre-market, we are here around 352. My expectation is that this gap will fill down to 350, and I think initially that will hold. If you were to get a kickback to 354 at this prior high, I think you can try a short there if you're not in. I had a carryover position, so I'm already short, but I would be looking to cover that around 350. If we get that move and if it holds. If it breaks, then it's a whole new ball game. Down here at 349.50, and then the top of this gap here at 348, then you would have more downside. Here it is on the 30-minute chart. You see it a little clearer where the gap levels are. Lots of airspace below that need to eventually get repaired, but that doesn't have to happen all on this cycle. It could be down the road. We don't know. But I think the key spots this morning are 354, and then 350, and then potentially 348 if that gap support here fails. Qs. I've shaded in a box here where price was trading here in the pre-market. Price came down, tagged the top of this gap at 282, and has gotten a little bounce here this morning just a few minutes ago. It's 7 o'clock as I started the video. So this morning, it's all about holding this gap at 282. If that were to fail, then you've got a very high likelihood of getting this gap filled down to 275. On any bounces, say up to 285 or certainly 287, back up to this level, I think that's a shorting opportunity. I think for the Qs, it's fade the rips. Look for the short side. Look for the short entries. Look for the halfback. The 50% retracement fibs on any of these moves, and those are often very good entries on a trending type situation, which I think we're going to have here. So also, don't forget, mark your pre-market lows on the indexes and whatever you're trading. because oftentimes, and we've seen it a lot here in the last 2 weeks, even though they may bounce it in the pre-market, during the regular session they come back and test that pre-market low just for validation. So be ready for that move, and don't get sucked into some fake bounce before the open, where you say, oh, now they're going to run up here. They might, but I think the odds favor coming back up to this area, possibly closing this gap, and then coming back down. Notice the PPO bear cross, high level bear cross. If that executes today, then it may look a lot like this structure here, where that led to quite a significant decline. These high level bear crosses on like a 2-hour or daily are usually quite significant. They're not like a 15-minute chart where it can just reverse quickly. These are usually broad sweeping trend inflection points, so watch that. Here's the 30-minute chart. There's a gap here down to 287. We're well below that now this morning, and you can see price near this sizable gap, and the potential for a bounce and then a rejection. So definitely, if price loses this 282, get short. That box is $7.50 wide, so that's going to be a tremendous opportunity you want to be on board for if you're an active trader. IWM is up. It's kicked back towards this 173 area. If you're not in, 173 is a perfect line in the sand. I mean, if they're going to pile into cyclicals and small caps, you can get long on a break above 173 and just anchor your long there. If it comes up and it gets rejected, then you've got a perfect anchor point for a move back down to fill this gap all the way down to 164. So 163 is going to be definitely your pivot for today. Above bullish, below bearish. And this is just an exploded view of the same thing. You can see here a couple of 3 or 4 tries to break above 173, where it got stopped and then down. So still plenty of gap to fill, but pre-market up towards 173. Facebook, I've made some notes here. Facebook, when I started the video, was trading around 272. So really here in no man's land, below trend, inside the gap. It should open with airspace above and below price. I think that's a no trade. You've got to wait for either a kickback towards 280 or a breakdown towards 265 before you can have an objective, long or short, depending on which way they break it out of the gate. But at 272, I don't like that setup unless you're really good at trading the open. I usually like to wait for a line, to shoot against. Like this 275 would be good, because here's a level here, and you've got the uptrend line. So a kickback to 275 would be a spot for a short entry as well. Apple trading around 114 to 115, right in here. As we talked about yesterday in the recap, I think 115 is your bull bear pivot. If we open, let's just say 114, and it kicks back and recaptures 115, I think you can be long and look for a move up to 116.50. If it comes back up to 115 and gets rejected, I think you get short and look for 113, 112, and potentially 110 on a gap fill lower. But I think 115 is definitely your pivot there. Tesla, trading around 410 in the pre-market, which is right at our next pivot level. If it can hold, the target's 420. If it fails, the target's 390. That's the way I see it here. The nice thing about this is it should open very near a decision point. So you're not going to have to wait for a lot of travel before you can take the trade. You know, right here at 410. If it holds, you can be long. And if it fails, you can be short. And then that is your pivot. But I will say that as long as price is below 420, it's on the wrong side of the chart. I view anything above 420 as bullish and anything below 420 as bearish. So if you got a kickback up to 420, I would be trying to short that, and then with your stop just above, you know, if you get stopped out, that's your paper cut. But if this was just a move up to fill this opening gap, that would be a great place to anchor short and look for a move back down. Microsoft, I got it trading at 214. So right down here on the top of this gap almost, right here at 214 at this level, use your gap as support. And, you know, as long as it holds, you can be long and look for a bounce up here to 217, possibly 218 to fill the gap, but I'd be looking to fade that. And if you got to break into this gap, that's $5 wide, I would be getting short and look for a move back down towards 208, 207, 206 down there, depending on how much selling pressure comes in. Amazon, I have it all the way down at 30.80, all the way down here already at the bottom of this gap, and prior support area at 30.52, 30.50. I mean, $2 on a $3,000 stock is nothing. So just use 30.50. As long as that holds, you could look for a bounce back up to 31.50. I mean, this is a $100 wide box, $100 wide gap. So if you were to get an entry here, if it holds, that's worth shooting for. If in the pre-market it works its way up to 31.50, I would look for that to be rejected there. I would look for that to be sold and come right back down towards the pre-market low at 30.50. And then if that breaks, 29.75. Google, I did not take a look at. I apologize about that. But the lines are clear. 1740 has to hold, or 1700, then 1650 come into focus with this gap. If it can reclaim 1780, you got a nice long. If it comes down here to 1740 and holds, you've got a long try with the idea of bouncing back up towards the top of the box at 1780. But, you know, like for me, like I said, I would be looking more to fade bounces than to buy dips. You can trade both ways, but I think the tide is starting to go out on this big cap tech trade, and I think there'll be a lot of people motivated to sell on any baby bounce. Netflix, 462, way down here, pre-market. So you've got a level just above at 465. If that were reclaimed, that would be a bullish move where you could get long and look for a bounce. Or if it comes up to 465 and gets rejected, that would be a nice short. If you're trading Netflix, please go to your daily chart and take a look at it. I believe that the target is going to be down towards 420, 415, down in that area as a first target. We had looked at that a while back, and that's the level that I remember. So here's another one that, is back on the wrong side of the chart after having, gone up, made a run back, and then looks like it's rolling over again and below a key level in the pre-market. Here's a few trade ideas I found. Maybe something here will appeal to you. Levi's, big impulsive move off of key support, now consolidating in a bull flag just below resistance. If we were to get a pop right here and clear this 1675, 17 area, I think you can take that long against 16.5 and look for that measured move up towards 21, 22. This one may have turned the corner here, but no trigger, no trade. You got to get the breakout here, and if you do that, then you can get long against this prior high at 1650. Work was back down at this 25 level a month ago. Got a big run up here to 33 where it failed. Now back at 25. I mean, if you like work, you're supposed to buy right here. It's at support level, still within value. You can buy that and be long against 25 with a stop just below and try to look for a push higher. If you're a little bit more skeptical and you don't like that trade, set yourself an alarm just below 25, because if this level fails, you're going to get a fast move to 20. At this next key level down below, I think you would see that pretty quickly. So I think there's plenty there for both bulls and bears to like. You're at a critical spot. I mean, this is the decision level. As long as it holds, bulls are in business. But if it breaks, then bears take over and probably run it down to 20. Lows, massive red candle yesterday. And if you look back on the chart, you got to go back to March to find a red candle that's bigger. Pretty impulsive breakdown. This is a $25 trading range. 25 from 155 puts the measured move down at 130. You do have the 200 in the way at 140, but this is a short unless it can recapture 155. I know a couple guys that thought this was the breakdown here where it held and got that boost last week, and it let go today. And now price is below the trading range, below all the fast moving averages, and really the only thing stopping it is the 200 at 140, or this is going to find 130, 125. Notice the air pocket here below. Not a lot of trades while all this was going on. Not a lot of trades to build any kind of technical support. So this is a critical juncture here for lows. Verizon weekly chart breaking out above resistance here at 60. I like this one long against 59.5. You're not going to get rich on Verizon, but green is green, right? If you can camp out in a December or January call, 60 calls, I think this thing can find 66 up here. If you look at this, you could use your imagination a little bit and come up with a cup and handle structure. There's your cup, and here's your handle. I like this long here. I like this setup. I like the rising PPO. I like the rising RSI. I think that's a low risk, low volatility trade that I think will work. But don't forget to set your stop, because we know bad things can happen, right? Despite our best laid plans. DraftKings. Rolled over. Lost key support, dual support. You had a rising uptrend line. You had prior highs, breakout levels. It failed. Kicked back to revisit the scene of the crime with a back touch of the trend line, and then fell away. And I think it's notable that although it was only down 2% yesterday, all the other casino stocks were moonshots. I mean 10 and 20% kind of stuff. And I thought it was interesting that DraftKings didn't have anything like that. Now, of course, the other casinos are all, physical, like going. So the COVID news was much more beneficial to, physical locations than, the virtual thing. I think this is a short. I think it's a short against 42, 42.50. I think it comes back down here, and I think it comes down to at least touch the 200 and this key support level down around 32. And if it were to pick up and recapture this, then it very well may be on its way to rebuilding the bull case. But right now it's below trend, below key support, below the 20 and below the 50, and you've just got the 80 MA here as support, and I think it's going to at least come back down to this prior low for a check on that. Okay, guys, let's leave it there this morning. Buckle up. Look for good opportunities. Look for objective trades. Your first obligation is to manage what you own. Make a clear-eyed, realistic look at what you have, what levels your entries were at, where your stops are. My recommendation is to respect those stops. And hey, if this cyclical thing isn't for real, we can always buy them back, right? Or you can on your holdings. But don't wait. Don't go into denial. Face it head on. And remember, you always have the option just to clear your account. And a lot of people say, clear my account? What are you, crazy, going all to cash? Yeah, so you can recenter yourself both financially and psychologically to look at fresh trades without that P&L staring at you, every minute of every trading day, and you thinking about that loss. If you think it's a loss and it's below your stop, close it out. You don't want it to be a psychological drag going forward that's going to color your trading in an adverse way. Right now, say to yourself, where's my next opportunity? Where can I find a good objective trade, either on the long side or the short side? Be open to anything. These narratives, these markets are changing fast. So take it day by day. Take a deep breath. I think it's going to work out fine. You know where to find me. You can reach out, in the trading room. You can shoot me an email. We can chat on the phone. We can open up a Zoom session. Whatever you want to do. I'm here to help. And if you're stuck, I'm happy to lend a hand. So don't be shy about reaching out. I have guys do that in the trading room all the time. Take a look at this chart. What do you think about that? I'll offer my opinion. And hopefully that'll help you. So, all right. Have a good trading day. If you're new to the channel, please subscribe. I'd love to have you on board. Hit that alarm bell and you'll get notified of all my new content. Look over in the show notes for convenient links to the blog site where you'll find a lot of helpful trading information, articles, and a place to register for my content where you'll get a nice email each and every time I send something out so you won't miss a beat. Thank you very much for your time this morning. Hope you have a good morning of trading, and I'll touch base probably around midday with an update or sooner if I see something happening. So have a good day of trading and talk to you soon.